Hi, welcome. You're watching BloombergQuint Live. I'm Alex Matthew. The headlines. The markets managed to hold on to early morning gains led by heavyweights, State Bank of India and Reliance Industries. And Reliance Industries becomes the first Indian company to hit a market cap of 6 lakh crore rupees. The telecom sector stocks are also shining in trade today after Reliance Jio reduced the tenure for various tariff plans, hinting at a stable pricing regime going forward. And Indian Energy Exchange lists at a discount to its issue price of 1,650 rupees per share. And now it's over to Darshan Mehta for Hot Money.
Thank you, Alex. Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is Sangeet Lakkar of Newberry Capital, who says it's difficult to find value in current market euphoria. Samil Kalra of Target Investing says that the dips invest the fall, and G. Chokalingam of Economics Research says he's cautious on mid-cap space. However, he is not overall worried on the overall benchmark indices and the large-cap stocks. Today on Hot Money, we will discuss stocks like UltraTech Cement, Century Textiles, Petronet LNG, Karnataka Bank, and Claris Life. On to the first stock that we'll talk about, that is UltraTech Cement. Numbers came out on over the weekend. Numbers came out on Thursday. The numbers were pretty decent. If you're looking at it, the counter's up almost 2.6%. What to do post the decent strong Q2 that is there? What should one do for UltraTech? Let's ask our guests. Let me start with you, Sangeet. Any view on UltraTech?
So I'm neutral to the stock. I mean, it's the best play on the cement sector, and cement as such is a proxy play on real estate and on infrastructure. But having said that, as far as the valuation is concerned, it's about $230. Which is one of the most premium listed cement stock. So I would rather, and this is a very well covered stock also. I mean, all the institution investors would have some bit of holding in the stock. So I would rather look for some other.
Anything else that you prefer in the cement space, and overall view on the cement space?
To some extent, I prefer Dalmia Bharat. So I am positive on the sector. Because you don't have much of the capacity additions coming through. So I would rather prefer somebody who is more focused on the east and the east side of the business, which is Dalmia Bharat.
Okay. Mr. Chokalingam, any view on UltraTech? Do you agree that it's something it's a little difficult to get into cement at this point of time?
He's absolutely right. It is not little difficult, it is highly difficult.
Okay.
Because cement volume, even last week if you have seen the media, it is growing only at around 3.5 to 4%.
Okay.
And as he mentioned, valuation about $200 per ton. There are some companies which have done expansion at $40 per ton. So it is abnormal. And third, if you see first off, the revenue growth was around 6.3%. And a lot of people in the industry have projected about 20% growth for next 2 years. So first of all, I doubt whether that is possible. Even if that is possible, still it is stretched at around 26, 29 PE.
Okay.
So commodity business in the history, they never commanded this kind of valuation.
No, but all cement companies actually trade at a much higher valuation compared to the other, be it whatever factor they are playing on. But for UltraTech, you are rather bearish at this point of time.
Certainly. I mean, see, we have seen the valuation. Tire industry was a 3 PE, became 15 PE. And we saw the IT company, Infosys, used to enjoy 150 PE. The PE, high PE has to be sustained by the growth. And the cement industry has joined what I call single-digit growth syndrome, which is encompassing many sectors. So definitely it is not justifiable.
Okay, because even UltraTech, the volume growth was single-digit if you exclude JP Associates. Do you believe that they will be able to turn around JP Associates?
They can, but because one has to admire the kind of management quality from where they have taken up to this level. But even then, the valuation is highly stretched.
What's your top pick on the cement space then?
I may be wrong. I'm not buying any cement stock now.
Okay. What's your view, Sabir?
I'm neutral on the stock.
Okay. Any reason?
The main reason is petcoke. Petcoke prices have gone up drastically. Right now they're around $105 per ton. Now this is the main concern because power and fuel wise, that's the major cost component. Now until and unless this shows some kind of a decline or the margin expansion or the help of the acquisition of the JP Associates will take a little longer time. So that's why I want to see next few quarters and see the petcoke prices, how they take and where they take it up.
Any view on the sand shortages that, I read through a lot of brokerage reports and most of them point to a lot of sand shortage that was there, and UltraTech actually mentioned it on the con call. How important is that? And because you spoke about raw material prices.
See, that is important, but if you take into the whole system as an account, again, if the whole main material, which is the pet coke, is going up, sand mining, which has been banned certain areas and the supply is constrained, that is like a secondary priority, I think, from my side of view and the management side of view. They sounded more concerned about the pet coke prices and trying to substitute it through the coal usage now onwards.
Okay.
So that is more important for me to see, because even a 10% or a 5% drop will change the valuation point and take it further into that price range.
Okay, so that's the view that's coming in on UltraTech and the cement space. Not too much value currently because both Sangeet and Mr. Chokkalingam believe that valuations are extremely expensive. Sangeet believes that a Dalmia Bharat may be a better choice. Sameer is also rather neutral given the fact that raw material prices are increasing substantially. Let's move on to the next stock, and that is Century Textile. The counter has been buzzing recently, up significantly from the recent lows. Is there value creation in Century Textile, because they operate in multiple space, the biggest being cement, the stock of hiving of the paper division, then there is the textile division. What should one do with a company like Century Textile? Samir, I'll start with you. Any view on Century Textile? Can it create value for shareholders?
So Century, I'm neutral on. Again, I see there are two triggers which I think investors, especially retail investors, are looking to. Is first the sale of the pulp and paper business, and second, there has been a certain rumor of it getting merged to Grasim after the deal happens. As a business, they are doing cost measures which is benefiting to them at a certain profit level, but the main concern for me is the debt. That will only happen as a debt-free status when the sale happens. So I'm looking mainly towards that sale, and then I'll form a view of a bearish or a bullish on the system.
But would you turn positive if it manages to sell its paper division?
I will, because then the cash utilization which is going into the pulp and paper, that comes back to the actual core system of that cement. And if or whether the merger doesn't take place, now operationally it's more governed by the Grasim management rather than the
because you spoke about the Grasim merger. In fact, it was BloombergQuint that did that entire story on merger. So does it make sense for Century Textile to be merged into Grasim?
Yeah, it does. See, one point is, if it's already taken into system that the pulp and paper is out, only the cement, majority of the business is cement, then the holding wise it doesn't make a sense to have two different companies running differently, because management wise there is somewhere the similarity between the Grasim cement business and today the cement business which is run by Century. So I think once the pulp and paper is sold off, there will be better synergies if they do a merger.
Do you agree, Sangeet? What's your view on Century? Are you bullish, bearish? What's your view?
So I'm not very positive on this stock. I think a lot of the news and the rumors are there in the price. I think all the investors are playing for the story which you just mentioned about. Talking specific to the cement business, now they have 4 plants in cement. 3 out of the 4 plants was operational in 1980s somewhere. So it's a very old plants. So in terms of efficiency, it's not going to be so easy for them to integrate and compare to what possibly Grasim or UltraTech has. Only one of the plant has been recently commissioned.
Okay.
So I don't see too much of value being attached. But yes, it's a big trigger if eventually some kind of corporate structuring happens, whether it's sale of the paper business and merging of the cement businesses.
So this deal you are rather bearish on Century Textile. What about you, Mr. Chokkalingam? Any view on Century?
I'm also bearish. Even if you assume 6 to 7 times EBITDA to EV, EV to EBITDA for textile and paper, and around $130-140 per ton for the cement, and also valuing some land, my calculation comes to around 1100 rupees.
Okay.
So according to me, it has already created wealth, and all these speculative expectation already played out.
Okay.
So one should sell the
So
stock.
you're saying even if they manage to sell the paper division, even if if there is if there's a merger with Grasim, it's already in the price according to you.
For news, it may move up 50-100 rupees, but in terms of
how has been the Century Textile?
Yeah, right now they have around a 4,500 to 4,600 crore debt, right? So they're putting a 5,000 crore valuation to the pulp and paper business. So once they sell it off, once they do, they become a debt-free firm. So all the cash flow which was getting employed in payment of interest and the debt part, so that helps the business out to be more focused on the cement side.
Okay.
So what he's talking about, the 3 plants, like even UltraTech right now, when they took over the Jayaprakash plants, they did a certain expenditure to increase the quality of the cement of the production. So similar way I think can happen in Century, and that can turn another efficiency levels as well.
But
But
also
I
you
doubt
have
whether anybody can pay such exorbitant price to paper. What happened to Andhra Paper? International Paper Corporation paid 1,000 rupee. Now the stock is languishing below 300.
Okay.
Even one of the person to get disappointed in International Paper, because it's not a growth industry. As the gentleman said, cement is not the most modernized also. People are expanding even at the cost of $40. And I agree. I mean, if you clear the debt, earnings go up. My argument is that it is already in the price. The stock has moved up from 300-400.
How has been the history with Century Textile promoters in terms of shareholder wealth creation? If you are aware of it,
They were not to be able to pay any FT dividend because it was not doing well. Only in this latest quarter it has done very well. If you look at the bottom line, but historically they never made a big money to reward the shareholders.
okay.
also you'll have to keep in mind that the paper business is actually their highest margin business.
Yeah.
So if that gets sold off, so that extent the top line and the bottom line will get impacted. So we'll have to factor that also in the valuations and all.
You wanted to respond?
See, that I take into the system that margins are higher in the paper business, right? But if you see on the debt side, that's the majority of the debt return. So today my only point is, since there has been a chairman of Mr. Birla is there, so there might be a corporate restructuring which benefits the firm in changing the operational issues.
Absolutely, I agree.
So that is the trigger which I look at rather than the other thing.
Okay, so as of now, Sangeet and Mr. Chokalingam are negative on it because they're just playing it as a stock. They're not dealing with any kind of probably restructuring that can come in. Samir is rather bullish in terms, if this restructuring does happen, this can change the debt situation and change the restructuring organization of the company. Let's talk about the next stock, and that is Petronet LNG. The counter has been buzzing. It's up almost close to 50% this year. Is there room for the counter to grow even more? What's the business fundamentals? What can happen? I'll start with you, Mr. Chokalingam. Petronet, do you like the counter?
Yeah, I missed it. It has done very well. And I believe still it is around 15-16p on 1 year forward earning, and a lot of things are happening on the gas front, and this will be a beneficiary. So I am neutral, but if market goes up, this stock can give a good reward.
Okay, but why are you neutral in terms of, is there any specific reason, just valuation or?
It has already run up in the last 2 years. And on current year earning, it is close to 19-20 PE. But on assuming that there will be a significant growth, then the valuation multiple swings. So therefore, I would be, play conservatively, neutral stand on the stock.
Okay.
But definitely in the long term, it can give, because I remain bullish on the market. So along with the market return, this can also probably even outperform the market return.
Okay, Samir, do you agree valuations are decent, or you have a different view?
I have a bullish stance on it just because of 2 reasons. One is the Kochi terminal. See, they've already done the capex, they've already done the expenses which had a major part of the system. Now they are doing a running expenses, and it's hurting a margin in a certain way because they are not able to open it up fully because of the pipeline issues. Now recently they said that the GAIL is putting a pipeline from Kochi to Mangalore. So right now their capacity utilization is 15 to 16% at Kochi. Now if that pipeline gets laid by December 18, which is the timeline which they are talking about, the capacity utilization changes from 15 to 60 to 40%.
Okay.
So that gives a very big operational leverage to the financials. So what valuations right now people are accounting to, that takes around 20 to 25% of that capacity utilization. So that part is there. Second, they have signed a Bangladesh agreement for opening a LNG terminal over there of 7.5 metric ton per year. So their target is to have by 2020 around a 30 metric ton per annum kind of a importing and regasification. So 15 is Dahej, 5 is Kochi, and 7.5 is Bangladesh. They are trying to increase Dahej also to 17.5 metric ton per annum, Second is Sri Lanka. They have recently signed a MOU with a Japanese firm and forming a JV to open a LNG over there. So they are not limited to Indian domestic consumption now onwards.
Okay.
So I see a very big trigger once the Kochi and the international operations start up.
Okay. The return ratios appear pretty strong at this point of time, but for the past few years, financials have been very, very stable. You think this move will be able
so
to?
Kochi, I think
By when this financial trigger will come in?
Kochi should come by FY19 for them.
Okay.
In a big way,
Okay.
which changes the return ratios and which have been
from the
stable.
capacity utilization, from what is it currently?
So it's around 15 to 16%.
And once
right?
Kochi comes in, how much will
So
that be?
by December 2018, they are accounting for a 40% capacity utilization.
Okay.
So that gives a 35% delta right now as compared to right now.
Okay.
So that helps out in churning because the expenses are already going on.
Okay.
Whether you use 15% or 20%, the expenses are 100%.
Okay.
So even if the capacity utilization goes up,
Hmm.
then the operational leverage and the financial leverage comes in.
Okay. Sangeet, do you agree with him in terms of Petronet? What's the view that you share?
I'm also bullish on this stock. I think majority of points are covered by Samir. So just to talk on the macro level, if you see the world energy scenario, globally about 24% of the demand is met by gas, whereas in India it's only 6%. So this is the demand side of the potential that we have here. On the supply side of it, I feel there is enormous supply which is happening. US has recently entered in the current year as an exporter of gas. They just did a consignment to Japan and Southeast. So I don't think gas prices are going to go up from here, and they would be decoupled with oil. They continue to remain decoupled with oil. So that's another added advantage. Also on the Kochi refinery, which Samir has already elaborated, there is a BPCL expansion which is happening. So this also will enhance the capacity utilization. I think currently it's about 6% utilization, which as Samir pointed out is going to go up. And the management has also guided that the Mangalore pipeline is running ahead of its schedule. So you might have an opportunity of early commissioning of the pipelines.
Okay. Apart from Petronet, is there any other stock in the oil and gas space that you like at this point of time?
No, oil as a commodity, I am bearish. So nothing in that space.
What about you, Mr. Chokalingam? On the oil and gas front, you seem to be rather neutral on Petronet. Is there any other stock that you would prefer?
We like ONGC. It is trading marginally below consolidated book value. And even this morning we saw the news that they are planning to double the gas output and a substantial growth in the oil output. And a strong balance sheet. In fact, investment and cash is nearly 50,000 crore, which can easily finance HPCL.
Okay.
And acquisition of HPCL will give a lot of stability in earning and bottom line in the long term. So therefore, we like ONGC.
Okay, so that's the view that's coming in on Petronet. Mr. Chokalingam is neutral on Petronet, but he prefers ONGC. But Samir and Sangeet, both of them are rather bullish on Petronet. Let's move on. Before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the next stock that we'll discuss is Karnataka Bank. Is there traction that's moving on into private banks? Will smaller banks benefit from what's happening with the public sector bank? Are issues that happened at Axis Bank only concerned to the large cap banks? Will Karnataka Bank be affected? I'll start with you, Sangeet. Any view on Karnataka Bank? Do you think it's a good play that one should invest in?
So I'm neutral to bullish purely because of the valuation comfort which is there. It has a high dividend yield of 2.5%, trading at close to 1.5 times book. A private sector bank available so cheap. But obviously, having said that, the NPA problem I don't think is far from over. So we'll have to closely monitor the NPA levels. But yes, amongst the private sector banks, this looks to be a good bet.
But why is it trading at such a cheap multiple? Because compared to this, is there some issue that you feel that there could be there with Karnataka Bank?
So it's geographically concentrated. About 60-65% of the book is coming from Karnataka. And obviously Karnataka is due for elections as well. But I mean, that's just one value of pocket in the otherwise euphoric financial segment as such. So
But among the private sector banks, is Karnataka, does it feature among your top buys, or would you prefer if someone is holding a Karnataka bank, should he hold on or should he switch to another private sector bank which you feel that the traction can be there?
No, so as such we don't have a it's not a top buy in the list. That's why I say it's neutral to bullish. But since the dividend yield is high, since this stock is trading at 1.5 times book, it's a decent hold. It's a decent hold in portfolio. As and when the NPA cycle turns, this stock could be re-rated.
Okay, Mr. Chokalingam, what about you? Do you like Karnataka Bank?
Yeah, certainly. We are extremely bullish on Karnataka Bank. It is one of the topmost holding for our clients. We also personally hold it. For 2-3 reasons. This belongs to old private sector banking segment. It has survived nearly 85 years successfully. And the price to adjusted book value is just 1.1. This is the cheapest bank in terms of price to adjusted book value among 27 banks listed in the country. And even if you take market cap to business, it is one of the cheapest within the old private sector banking space. And very interestingly, when the industry credit growth is growing at around 7%, this bank has grown the credit at double digit continuously for last 2 quarters. And as I said, old private sector banking space has seen consolidation in the last 25 years, starting from Bank of Madura. The last one was Vaishya Bank. Most of these acquisitions happened at around 2.5 to 4.5 times price to book value. So I believe that the consolidation will continue because the entire banking industry credit growth is around 7%. Therefore, the large private banks cannot grow 35-40% in the future.
Okay.
So therefore, they will think of the consolidation.
So do you believe that Karnataka Bank could be a takeover target?
Yes. This has already happened to 4 to 5 banks within this space.
Okay.
Bank of Madura, Bank of Rajasthan, Lord Krishna Bank, Vaishya Bank. And that would continue.
So, but why? That's what I asked Sangeet only. Why does Karnataka Bank get such a low multiple? Is it only because it's concentrated in Karnataka, or is there some other reason?
I've been tracking this particular space for the last 25 years, very passionately. I can tell you something very interesting. Very difficult to give the reasons. This is what happened to City Union Bank in 2012 and 13.
Okay.
That remained as the cheapest bank for 2 years. Then from there it multiplied 7 times.
Okay.
Last 2 years, this is what happened to South Indian Bank. That went as low as 17 rupee and remained as the cheapest. That played out. Karur Vaishya also remained as the cheapest bank. That also doubled in the last 1 year from the bottom. So we don't know why the perception differ, but ultimately these banks have rewarded phenomenally well if you pick up at the right price.
No, but the return ratios of Karnataka Bank are not the best. It's rather low. The growth is not there. Asset quality controls, I believe the GNPA is above 4%. So why would someone want a Karnataka Bank? And despite these concerns, are you still playing it only on because of it could be a potential takeover target, or is it cheap?
No, even in terms of valuation and growth.
Yes.
Now today you can't find more than 5-6 banks in the entire listed space having net NPA less than 4%. These banks still has got around 3% net NPA. And there are very few banks which are growing the credit in double digit. It is one of those few banks.
Okay.
As I said, 12% is a credit growth for the last 2 quarters. Very few banks are growing. So, and if you take any PSU bank, you know what is the kind of valuation. And now if you look at the Bharat Finance inclusion, it has been acquired at 53 times profit, 5 times book value. It's focused on a single segment, microfinance. Whereas here you have the diversified lender with close to 1 trillion rupees of business available at 1.1 time. So I am very comfortable with the growth and even relative terms quality of assets and also valuation. So I feel I may be wrong, but I am extremely bullish on this.
Okay, so 2 thumbs up that's coming in on Karnataka Bank. Samir, is it a third thumbs up or a different view?
I have a neutral to no view because of 2 things. Is one, they've already talked about NPA issues. Second is, see, as far as I've read the history or I've understood that targets when they're acquired for one reason, is the reach. First is the reach, then is the book, and then is the profitability. So Bharat Financial, when it was acquired by IndusInd, it always matches to the reach. That kind of a reach, I don't think so any microfinancial firm had or has. So that helps out the bank. When a Karnataka bank is talked about the takeover candidate, now the reach is limited to a certain area. So until unless someone really wants to enter that area and buy into that area, for me, setting up branches in one state is not that big costing as compared to acquiring a bank.
Okay, so that's the view that's coming in on Karnataka Bank. Samir is rather neutral on the counter, but Mr. Chokalingam as well as Sangeet are extremely bullish on Karnataka Bank. And moving on to the final stock, it has been in the news recently, Claris Life. What to do on the stock post the deal? They've already sold off their injectable business to Claris at a huge multiple. the company indicated that the transaction costs were extremely high, and that caused the counter to crash significantly. So 1,500 crores of transaction and taxes was something that was a big deterrent. What to do with this counter? Sangeet, let me start with you. Do you have a view on Claris? What should one do post this deal now?
So yeah, the company has declared that it has 381 rupees per share as in cash, which is obviously came as a big shock to the street, because in the con call which was held in July, the management had only guided for 600 crores towards the expenses. Vis-a-vis now they have declared at 1,500 crores, and they've also added that these includes incentives to the key managerial persons, which was never talked about. So obviously this is something for the regulators to look into. Having said that, the price is right now I think 348 or so. 381 rupees is the cash available on books. 10 rupees is approximately the book value of the plant and machinery. So that makes it about 391. Now there are two scenarios. One is either the company gives it out as a dividend, or it actually goes into delisting. My calculation suggests that it should be opting for the delisting route, because the promoter's holding is about 50%. If they give it by way of dividend, they would have to shell out 30% tax, including the 10% extra tax which was introduced in the last budget. So I don't see that as a tax.
What about buyback?
Buyback again could be option, but could be an option, but again that in that case again it comes back to the shareholders.
Okay, Mr. Chokalingam, any view on Claris Life?
In fact, we initiated at 177. Last week we closed the call after seeing this news. I am thoroughly disappointed because you are allocating more than 1,500 crore for a transaction cost, incentive to the managerial, but you are not giving the breakup. This is a big shock. As he said, the regulators have to look into this and make this management to be transparent. So we don't know how much is going into escrow account.
Okay.
Without assuming that you are getting 381. By any chance, out of 1,500, 1,000 crore is in escrow account, which can ultimately come back if they fulfill all warranties. Then it will be a big upside. But I am really disappointed the way the numbers were disclosed. So we gave a sell call, and even our firm invested. That also will be selling in line with the compliance process.
Okay. What about you, Samir? Any view on Claris Life?
I have slight of a positive view, because see what happens whenever this kind of news comes, and street always overestimates. They take into account, okay, the management has said in 500 crores will be the expense or 600 crores will be. But eventually, till the time the news comes out, everyone is too bullish on it, and all of a sudden when the news comes out, it hits out. See, now when they have taken out 1,500 crores as an expense and incentives, I think if they do the disposable, which is around 2,000 crores, if they distribute that into all the shareholders except promoters, whether they do delisting, whether they do dividends, that is a whole different question. But I think if they do it only to non-promoters, then it doubles the amount.
Okay. So that's the view that's coming in on Claris Life. Mr. Chokalingam is rather disappointed with what the management has said. Sangeet is rather neutral on it, but he was also disappointed with what they did with the expenses. Samir has a different view in terms of what can happen, because he believes that the market has a tendency to overestimate. Before we wrap up on the show, here's a quick recap of all the guest view on the stocks that we've covered till now. Okay, Mr. Chokalingam, Sangeet, Samir, thank you so much for joining us. With that, it's a wrap on today's Hot Money. Thanks for watching BloombergQuint.